A judge on Friday temporarily blocked Venu Sports. It's a joint venture of media companies Disney, Warner Brothers Discovery, and Fox from launching their sports bundle. And this injunction comes just weeks ahead of the start of the NFL season. Fubo, which operates a streaming bundle similar to a traditional pay TV package, brought on the lawsuit, claiming Venu was anti-competitive and would upend its business. Shares of Fubo jumped on the news, rose again today, and joining us now in a First on CNBC interview is Fubo Co-Founder and CEO David Gandler. David, welcome. Is this Venu venture an existential threat to Fubo?
Well, it was, which is the reason why, we decided to file this lawsuit. But I think today the big winner is the U.S. consumer. We presented a solid and credible case regarding this joint venture that attempted to deprive consumers of choice and affordability.
So this is a temporary block, though. There's a pretty decent chance, it seems, that it could go forward. If it does it crush you?
Well, I don't think I'm going to talk about that right now. I think the first step is that this was a positive development. We believe in the merits of our case. Looking forward to seeing what happens next with respect to a potential appeal. But I think at the moment, we're really focused on the start of the football season.
Okay, talk to me about that in the context of subscriber growth. I think your North American subscriber growth most recently was up 24% year over year. At the same time, though, we've got these inflationary pressures that are all the talk, not just in business, but in politics as well. You've got a free tier trying to mitigate some of that. But is that going to continue to work long term, or are there other things you have to do?
Yeah, look, I think as it relates to our second quarter results, I think they were phenomenal. As you said, we grew double-digit growth year over year. I think it's also important to note that we've exceeded guidance 13 of 14 quarters since being a publicly traded company. And we've also seen 6 consecutive quarters of improvement across our profitability metrics, and we're continuing to maintain our target of achieving profitability in 2025. And yes, we are continuing down our current path, which we highlighted before, which was our super aggregation strategy. And the free tier is sort of the first attempt at that. And our goal is to ensure that we can attract customers at different price points along the demand curve. And, that strategy seems to be working at the moment. And, we're going to continue to double down on it.
What's going to make the difference long term for Fubo's success as so many different streaming companies, some of which are partners of yours, seem to be trying to compete in different ways, either on the live sports, the events themselves, or on content around those? How does Fubo distinguish itself enough to continue that growth?
Look, we've stated very clearly our strategy is around super aggregation. We are not an app store. We're aggregating, the world's best content in a very seamless way for our customers. And going forward, we'll look to be able to provide them with multiple skinnier bundles, attractive packages from a value perspective. We think that is the differentiator from what we're seeing today.
And what about your costs? Again, from some of the same companies that are trying to compete with you here, you have some costs. Are those controllable or manageable from your point of view, or is there any hope of you bringing them down?
Yeah, well, look, it's clear that we're bringing them down. If you look at our operating leverage from the last quarter, our largest cost line was our programming costs. And those, if I'm not mistaken, have come down from somewhere closer to 100% of our total revenue to below 90% of our total revenue. And so as we scale our business, we believe that we'll continue to see pricing strength, pricing improvements, and greater leverage across our operating expenses.
And the consumer and the continued health of the consumer, how much does that factor in to your growth prospects the way you see it?
Well, look, I think, we cater to the avid sports fan. And so sports is a critical part of American life. Americans love sports. And, we continue to attempt to provide a service that is able to meet the needs of consumers. And, we're doing our best to keep prices down. Obviously, that's a function of league rights, not even the programmers. But there's clearly a lot of interest in sports, both upstream as well as downstream. But we're doing our best to maintain prices and provide consumers with some flexibility.